the S&P hit 6,000 this year. Honestly, I wouldn't be surprised if that happened this year. I'd probably put it at odds of like, say, 25% that the S&P 500 can go all the way to 6,000, hit that whole number, that psychological whole number of 6,000. That seems quite far-fetched, especially because we've already gone on quite a big run. And right now, the S&P is at 5,137. But if we're just going to look at this chart here of the S&P, and here I've just put this vertical dotted line, and this just signifies the end of the year, right? So we've got all of this time to hit the green horizontal line, which is 6,000. So to me, it seems like it's in the realm of possibility. And generally speaking, whenever we break out to new all-time highs across the top here, and it's been a few years, generally after that breakout, it takes everyone by surprise. Everybody is scared because of the last big pullback, but they don't realize every single day, like if we go back to the previous all-time high before this monster run, so we had a big crash when that COVID came, and then when we broke out, every week, all-time high, all-time high, all-time high. Practically every single green candle you can see here is a brand new all-time high. So if we're going to be counting them, it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I'll skip a few there. 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. Like, I skipped a few of those green candles there, which I just quickly eyeballed it. That didn't seem like they were all-time highs. So like, it was like 27 weeks of all-time highs. That's pretty damn, well, it's actually normal. It's normal, but if you would say, hey, 27 weeks we're breaking out to a new all-time high, if you were to say that to someone who's not educated about how the stock market works, they'll say that's crazy. For some reason in people's head, they feel like it only breaks out once to all-time high and that's it. But generally, the stock market tends to go higher more often than not. Like 80 to 90% of the time, the stock market is actually going higher. It actually doesn't go down that much in terms of time. So, yeah, I believe there's high odds that everybody gets taken by surprise. Because if you think about it as well, like interest rates are quite high. Interest rates, they haven't dropped yet at all. And yes, I think the stock market is already factoring in that because the stock market lives 6 to 12 months into the future, right? So that makes sense. But I believe the day of an interest rate drop, the market will soar. Most likely the market will soar. Like during COVID, every time people were already factoring in that the interest rates would keep on dropping, but every time they dropped more, market ripped again. Market kept on ripping. So I believe like half of it is already factored in. But the market is not 100% efficient, right? If it was 100% efficient, the market would just go up at the exact rate that these companies were actually internally compounding. So if a company was internally compounding at 10%, it'll be a straight vertical line at 10%. Like that never happens. So the stock market's, it's a game. There's emotions involved. There's investors. Everybody's thinking something different. There's so many different factors, and when you combine all of that, that's what you get. You get today's price. So the market isn't 100% efficient. In the long run, it is very efficient, but in the short term, it's not efficient. Like it's not that efficient. And if we're just to scroll out here, all right, I'll get rid of a couple of these green lines so we can just see what we're working with. Actually, before I do that, let me scroll in. So if I'm just to draw a random squiggly line, remember, if I just go like that, does that, like, have we had this in the past, this squiggly line? Obviously not very scientific, but I'm a big believer in sometimes just don't overthink it. Sometimes just act like a baby. That's what I'm really about. Like, what would a baby think? Like, hey, this squiggly line here is more steep than this one, right? If we did pull back and we're like that, would that make sense? Now, let's just zoom out. She looks really normal. Like, that type of squiggle has happened many, 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 many times in the past, sorry. In the past, that happens very, very frequently. Like, look at this monster run. This monster run from 2013 to halfway through 2015, up, all the way. So, that's like, that's so all of 2013, all of 2014, and then 2.5 years of just up. So what if we got 2.5 years of up now? Like, I think that's in the realm of possibility as well. Hey, we went down for like a whole year. So, and maybe this is a start of a new trend. Going up for 2.5 years, I think that's normal as well. So, in 2.5 years, where could we be? So if we're 2024 now, let's go to 2026. 2026, 2.5, go to the mid, around June. Like, yeah, S&P could be at 7,400 then, right? 7,400 if we're at the top of the range here. And generally speaking, the market usually is at the top of the range. So anywhere within, this range here, I think is perfectly healthy. At the same time, 2026, we could be near the lows. So 2026, we could be at the same price as today, even, and that would be perfectly fine. But if we were there, that would be a massive, massive, massive buying opportunity. But I like to just remember, the stock market, there's a lot of smart people involved. If a lot of smart people are involved, it's probably going to be pretty hard to buy a bargain. Usually, you have to buy at a higher price and hold and let these companies compound. As they compound, they keep on growing, and then so you buy high and go even higher. It's quite hard to buy any of these cheap prices. Like, we could look at the cheap price, like, yeah, this last dip, it's like a week. COVID, a couple of weeks, here a week, here a couple of weeks. Whenever it's at the bottom of the range, it's only there for a couple of weeks. Generally speaking, it doesn't hold out there that very long. Honestly, this most recent dip, obviously the right at the tip was only like a week, but all of this range here, the market was actually quite nice to us. It was giving us plenty of time this time around to buy in at a very cheap price to hold and make all of these gains. So, the market has actually been quite nice. It was quite ruthless, but after that, it gave us a gift of being able to dollar cost average for quite a long time in at those prices. Anyway, that's just my thoughts. I've just been seeing, this is kind of like a continuation from the last episode. Just been seeing a lot of people saying the market has to crash. Generally speaking, when you break out to all-time highs, you're followed by more and more all-time highs. I wouldn't be surprised 27 more weeks of all-time highs. Just chucking that out there. Just so, yeah, hopefully you find it valuable. Anyway, guys, thank you for today. See you in the next one.